All right, excellent. So, welcome everyone. You are at the right place if you come here to learn about, uh, you know, taxes and the tax goodies and the CARES Act and stimulus checks and tax debts and liabilities and a bunch more. So I want to congratulate you all for making time for this today when so many other uh, people wouldn't. And you just taking the initiative to learn and uh, make what you can of the current situation is awesome. So thanks again for being here. My name is Paul Abraham. I'm the CEO of PJI Law. We're a law firm here in Fairfax, Virginia, and we practice in the areas of business law as well as estate planning. This is not what I normally look like. I usually have more hair, but this is what happens when you can't get a haircut anywhere. You just go to town on it. I want to introduce my good friend, Jason Wiggam. Jason is a tax attorney based in Atlanta. I've known Jason for a couple of years, and I've spent a lot of time with him at conferences and workshops, and I'll say that he is my go-to tax attorney. Anytime I get somebody who calls us and says, look, I've got this tax problem with the IRS, or I've got some debt I got to work out with them, or some other tax situation, I send them Jason's way because he's been excellent. So thank you, Jason, for making time and for being on this Zoom with us today to go over a lot of stuff. Because we're lawyers, yeah. So because we're lawyers, I feel like we have to do the disclaimer thing. Yes or no, will the things you'll be talking about today, will it be specific legal advice that people should absolutely rely on?
No.
Okay.
I mean, I'm going to give, I'm going to be pretty specific, but it's not going to be as to any individual or business or anything like that. If you want, feel free to call me and hire me. If you want specific advice, I represent clients nationwide. It's a federal practice, but yeah, no, can't rely upon anything you hear today.
Exactly. Yeah, I should mention that even though you're in Atlanta, like you said, it's a federal practice, so it doesn't matter. You work with people all over the country, right?
For sure.
Yeah. All right, cool. So we're just going to have a conversation. I mean, we've talked about a list of topics we're going to cover, so it's going to be pretty casual. We'll go back and forth, and then we're going to make sure we open it up for questions. We're going to make sure there's at least 20 minutes for questions at the end. We plan to be done at 1, so maybe hopefully you guys are having lunch, making or whatever, and then move on to your next thing at 1 o'clock. And that's pretty much it. So Jason, the last 2 or 3 weeks of my life has been just a, 1 month, like month-long, like SBA loan webinar / just loan. I mean, I've literally been living at all people have been asking about is the CARES Act and PPP loans and EIDLs, and we're helping people with that. And now we're helping them with for those who have gotten those, we're helping them with the forgiveness portion, which is more difficult. But I feel like because the SBA loan, because they've been such a big topic, no one seems to be talking about all the other good stuff that's in the CARES Act, and especially the tax aspect of things and what people can take advantage of. So let me just straight up ask you, I mean, what are some of the tax goodies, if you will, that the CARES Act has given us? And let's talk about individuals, and then let's talk about businesses too.
Okay. Yeah, sure. So for individuals, I think everybody knows about the stimulus checks. It's $1,200 for an individual, $2,400 for a married couple, and then $500 per every dependent under the age of 16. It's limited based upon one's income. You have to have filed your 2018, or 2019 tax returns, or if you haven't, the IRS has a portal where you can go in and say that you're a non-filer and get the check too. But the type of people that should do that are like Social Security recipients, or people who don't have an income tax filing requirement. If you're an actual non-filer, hasn't filed for a number of years, which are the type of people I represent, I wouldn't complete the IRS's form. You know, why dime yourself out? But you know, if you have not received the check or you're having any issues with it, the IRS actually has a really great website set up. Basically, it's if you Google IRS get my payment, you can fill in your information, fill in your bank information. The one thing that people I think aren't thinking about with this, if you don't receive the check now, you could get the tax credit on your 2020 tax return. So like I have clients who did very well in 18 and 19, so they're not going to qualify based upon those tax returns. But their business is struggling now. And if things stay the way they are, you know, we're in a recession for a while, it could be that their income will be, you know, lower in 2020. So they'll get those funds on their 2020 tax return. So I've had a few clients where we lowered their estimated tax payments equal to the check. So they're still able to get it. They're just not getting a deposit or a check from the government.
Right.
The other big thing for individuals, so there are some retirement distribution benefits. I mean, obviously, if someone can avoid taking money out of retirement, I think that's the ideal scenario. But if they absolutely have to, the CARES Act allows for the 10% early withdrawal penalty to be waived in certain cases. So if you're under the age of 59 and a half, you take money out of, you know, 401k or like a rollover IRA or retirement account. It's subject to income taxes and this 10% early withdrawal penalty typically.
Right.
So if the person has been diagnosed with coronavirus, has a spouse or dependent that was diagnosed, or they're experiencing, you know, adverse financial consequences due to the crisis, from quarantine, furlough, reduction in hours, or being unable to work due to childcare, they can get the waiver.
That's pretty big, right? I mean, that's
everybody.
essentially, right? Unless,
Yeah.
Unless,
I wouldn't have a problem defending anyone against the penalty now. You know, if I was involved in an you know, a year or two down the road, I think we would all qualify. So
if you're in good faith, say that like I'm experiencing adverse financial consequences as a result of being quarantined, furloughed, or laid off, or having work hours reduced, or I mean, there's so many exceptions. Then you can take money out of your retirement, and they'll waive the 10%. Is that something that you have to certify, and then at some point later or will they like automatically waive it once you certify it?
Yeah, on the 2020, and they don't have this out yet, but I assume the IRS will have like an election on the 2020 tax return where you can select that, you know, I took a coronavirus related distribution. That's like the technical term. Okay. So yeah, you get out of the 10% penalty, but it's still subject to income tax, which is why you wouldn't want to do this unless you absolutely had to. But the interesting thing that they included there, it's subject to income tax, so they let you spread the distribution out over 3 years. So if you took $100,000 out, you would have, you know, $33,333 of income this year, you know, another third in 2021, another third in 2022. And also they allow you to pay the money back for 3 years. So it's like, normally there's a 60-day rollover period. It's like you have a 36-month rollover period now, which is kind of cool. You can normally borrow up to $50,000 from a 401k if the plan is set up to allow for that. They increase that to 100. So for most people, if they can borrow, that's the way to go. Those are the big provisions for individuals. There were some other small ones, but I don't think the benefits really apply to everybody. There were a lot of provisions for businesses, though. Do you want me to go into those?
Yeah, definitely.
All right. So enhanced net operating losses. So a net operating loss is if, you know, a business reported a loss, you used to be able to carry it back 2 years and then carry the loss forward for 20. The CARES Act amended that. Let's see. Do you want me to answer that question? Or I'll wait until the end. Sorry,
I wasn't paying attention. Yeah, we'll do questions at the end.
I'll do it at the end. All right. And Vicky, I'll be able to answer that. So definitely hang out. So basically they increase the tax benefit of net operating losses. So you can carry a loss from 2018, 2019, or 2020 back for 5 years. For most people, I'm assuming they didn't have losses in 2018 or 2019. So it's really going to be when they file their tax return next year, the 2020 return next year. But what that does is if you did have a loss, you could, in 18 or 19, you could go ahead and amend the return now and get a refund. So it would be a way to access cash now. Another interesting inclusion was you can, if you're a business owner, you can pay your employees student loan debt up to $5,250, income tax free to the employee, and the employer gets a deduction. So it's kind of cool. You, as the employer, save the payroll tax. You normally pay 6.2% payroll tax, Social Security and Medicare. So that goes away, and you still get the deduction, and the employee receives income tax free. So, you know, for some of my A team players, my top performers, you know, we're probably going to assume student loan debt. We are going to take their bonus and change it as a payment towards their student loans, because it's a win-win for both of us. Effectively, I get to bonus them more money because they're not paying income tax on it. And then I save some payroll tax too.
So you don't have to, so this doesn't have to be on top of their normal compensation. You can basically restructure some of the existing compensation with employees and say, look, I'm gonna, instead of giving you 5,000 in cash, I'm gonna give you this 5,000 in student loans, and or maybe in that case you give them a little more, like 6,000, right? I mean, some additional amount where they benefit and your does that?
Yeah, that's exactly what you can do, and it makes sense, right? Because they're probably paying those student loans anyways, so the cash would have gone there, and it's a win-win for both parties. And the employees probably don't know about it either. So if you come to them with this, you're going to be their hero, right? Or maybe not their hero. That might be exaggerating. They're gonna like you for giving them this extra benefit. Don't really have to do anything extra, you know. It actually saves you money because you're not paying 6.2% on those 5,250 of wages anymore.
Mm-hmm.
You talked about it earlier. The CARES Act included the payroll protection program loans and the EIDL loans, so I won't get into that. The employee retention credit was included. This is a payroll tax credit, which I'm going to try to explain without putting you to sleep, Paul, which is tough because it's taxes. But basically, instead of the PPP, like if you were not doing the getting a PPP loan for whatever reason, you could take this credit. It is $5,000 per employee. You have to pay them at least $10,000 in wages, and it's half of their wages. So so 10,000, half of that's $5,000, up to $5,000. It's a credit. So what that means is it's a free payment from the government on the payroll tax return. So a tax credit is the same thing as a payment, and it's refundable. So if my payroll tax liability was $1,000, but I got a $5,000 credit, I would get a check from the government for $4,000. So it's cash now. They actually have included a way to request the money now too. And so how do you get it? How do you qualify? Basically, it's available through the end of the year. Payroll taxes are paid quarterly. So you qualify by each quarter. And there are two ways. The first way is there's a stay-at-home order. So if state or local government have put a stay-at-home in place here in Atlanta, we're currently under one. I think you guys in Northern Virginia are too. Looks like ours might end soon. I don't know about you guys, but so that's one way to qualify for the quarter. The other way is if the gross receipts, the gross revenue of the company is down 50% year over year. And so you would try to qualify for as many quarters as possible to get as much of the payroll tax credit as possible. You know, so what people are good for, you know, if you're not getting the PPP for whatever reason, you know, I've had some clients who had to lay off employees, furlough employees, and they're not going to bring them back. So, you know, they looked at, is it better for me to take this payroll tax credit, which does not have any strings attached, about rehiring, or is it better for me to take the PPP and get cheap money that I have to pay back? You know, so that's kind of the consideration that they are doing. And for some people, it's more money. You know, I have a client who hired a lot of people in January and February, and they're still employed. So when you do the PPP, it's your payroll for the last year. So it includes, you know, months prior to these people being hired. So it's actually more money for her to do the employee retention credit. You can, in addition to the employee retention credit, there is payroll tax deferral. So you can literally get this credit and then defer the taxes for a year, half until the end of until the end of this year, and half until the end of 2021. So normally, like I said earlier, the employer would pay 6.2% of Social Security and Medicare for on the employee's wages. So that can be deferred. You can make an election to defer it, which saves cash, and then you get this credit now, which is refundable. So you get literally a refund from the government of, you know, monies you don't have to pay for a significant period of time. So it's a pretty good deal for businesses. That's about it in the CARES Act. There's, like I said, with individuals, there's some other really boring technical things, but those are the ones that I think are most beneficial.
No, that's awesome. And let me ask you one more thing about the employee retention credit. So that's up to so essentially you can get up to $5,000 per employee, assuming, right, you paid them enough money and all that stuff, right?
Right.
Now, and it's either you do that or you do the PPP. So I'm trying to think for what types of businesses does choosing the payroll tax credit, the employee retention credit, make more sense. And based on what you're saying, it seems to me that it makes sense for those restaurant or businesses that don't expect to reopen and get staffed back up in the next couple of months. So I'm thinking restaurants, maybe dentists, you know, right? Businesses like that. Well, otherwise, if you expect to be close to fully staffed, and you still got to do the math, but in most cases, it seems like the PPP would be the better option. Oh
yeah, for sure. I mean, I would say for most people, PPP is the better option. Yeah, it's if you are concerned about whether you will get the forgiveness or not. Yeah, like your restaurant, salon. I have a client who has an events company. Like if you run a large event, he does all the audio, video, and the staging, and, you know, kind of everything associated with your event. He is canceled for all events through the end of the year, and he is not sure he'll have an event until 2021. So he's laid off half of his employees. They're probably not coming back for a while. So he still took the PPP. He just is not going to get full forgiveness and is okay repaying the money. You know, it's a cheap loan. Right. But we did look at the employer retention credit. It was just more money for him to do the PPP. So I think, to your point, Paul, most people are going to want to do the PPP, but they need to talk to a professional and see which one's a better deal for them. Makes sense. All right, very cool. So can I ask you a little bit more about these stimulus checks? Are they wouldn't be considered income, right? You don't get taxed on that. Yeah, the act made it so that it wouldn't be taxable income. The other interesting thing is normally when you have a tax debt, a tax debt and you receive a payment from the government, they take the money and offset it against the liability. They're not doing it here. The only offset for the stimulus check is unpaid child support. And then Okay, yeah, we got a lot of questions, so we'll answer those later. But yeah, that's really it. You know, it's just a normal payment. If I've seen an interesting scenario, like someone qualified based upon their 2018 income, but they would not qualify based on 2019. So they filed their 18 tax return, but they've not filed their 2019 tax return.
Okay.
You don't have to repay it. That's the interesting thing. So I've had a few of those clients and I've told them just extend. Don't file 2019 until you get your stimulus check. It's free money. So,
Okay. Cool. So now what about, so we talked about the PPP and the idle funds. Can we talk about the kind of tax implications of that? So let's start with the idle, right? Just for anyone who doesn't know what idle is, it stands for Economic Injury Disaster Loan. That's the one you heard about with the $10,000 advance, which really turned out not to be exactly a $10,000 advance, kind of depended on the number of employees you have. Plus, there's a larger loan coming, hopefully, for a lot of people. The advance, the amount, that's the part that you get to keep and you don't have to pay back. And that's going to be somewhere between $0 and $10,000. Is that going to be taxable income?
It's not. So the funds are not taxable, and then you don't have to repay it. It's basically like a grant. So normally when you have a debt that's forgiven, it's called cancellation of indebtedness income, and it's generally taxable in the tax code, but they specifically exempted it here. So there's no tax consequence for receiving the idle advance. Now I will say whatever you spend the money on, it is an open question whether that is deductible, but I'll explain that more when we talk about the PPP because it's similar.
Okay. And we'll get into the PPP in 20 seconds, but let me ask you about the bigger idle loan. So it's a normal loan, but the interest, that's treated just like interest for any other loan, right? It's deductible.
Yeah,
okay.
Regular loan, not the loan, the proceeds are not income, and then you can deduct the interest. So, and I mean, it's a great loan too, right? It's like 3.75%, I believe. And then, it's essentially free money once you deduct the interest. So, you got to repay it, right? But,
if you invest that money, you'll probably get more returns than, yeah, I mean, it's crazy.
Yeah, I mean, I have not heard back on my own. I've heard back on the PPP, but I'm not on the idle, but I do have clients that are, and, I've seen 50,000 all the way up to like 500. So whatever they will offer me, I'm going to take.
That sounds reasonable. All right, awesome. Now, what about the PPP? Now, let's say a business gets a, $50,000 PPP loan, and they do it correctly, they spend it correctly, they document it correctly, they submit the request correctly to maximize forgiveness, and they get the whole thing forgiven. Great, they keep the money. Now, how is that going to be looked at from a tax perspective? Is that going to be taxable income?
Yeah, so the loan proceeds, not income, normal loan. The forgiveness, and then if you're forgiven, do you get to deduct the expenses? I think is the issue. So, like I said earlier, normally if you have a loan and it's forgiven, it's income to the loan recipient. Here it was specifically exempted, which is awesome. So the 50K, if the entire loan was forgiven, would be tax-free to them. There is a provision in the Internal Revenue Code. It's called Section 265, and it says that any expenses that relate to tax-exempt income are not deductible. Historically, this comes up in situations where someone is investing in something that's tax-free, so like municipal bonds. Mm-hmm. Municipal bonds are great because you buy them and then the interest they throw off is federal income tax free. So if I borrowed money to buy municipal bonds, I couldn't deduct the interest on the borrowed money, which would normally be called investment interest expense. But it's unclear if it'll apply here because Section 265 is, like I said, designed more for like municipal bonds and tax-free investments. And there have been situations where there has been tax-free income and the government has allowed the expenses to be deductible. So I guess what I'm saying is if you get the PPP money, you spend it on payroll, rent, utilities over the next 8 weeks, and then it's forgiven, will you be able to deduct on your tax return the rent, payroll, and utilities that was just forgiven? That is an open question. If no guidance is provided, I think a lot of people are probably just going to deduct it and see what happens. But it is an open question, if you were audited. And I suspect our friends at the SBA are going to give us some guidance on the forgiveness because it is, as you said earlier, a bit of a mess and more difficult. So maybe they'll address this, but for now, kind of unclear.
And I wonder if that's going to come from the SBA or the IRS, or or if Congress is going to pass legislation clarifying this whole thing. It's going to be interesting.
Yeah, I don't know. I could see if the IRS makes a ruling on it, it's not going to be deductible. I can guarantee you of that. So you would really need Congress to clarify, to your point, or I don't know, maybe, I guess the SBA probably can't provide guidance on the tax code, to your point too, but if there's no guidance, like
right.
With most things, if it's gray, my personal opinion is do whatever is in your self-interest, but otherwise, let's just wait and see.
Okay, cool. Now, let's talk about, a lot of, people don't realize this, but a lot of people owe money to the IRS. They just owe taxes, right? They just owe a lot of taxes, and you can't tell because they walk among us and their business is functioning and all that stuff. And I want you to talk about A, normally how you would handle these things, and B, I want you to let me know, has anything changed with the CARES Act or with just the coronavirus thing, or is the IRS treating things differently now? So let's say I'm a business owner and I owe $40,000 in taxes. What am I looking at here?
Got it. Well, first of all, I would say, so most of what I do is help individuals and businesses that have tax liability they disagree with and are disputing. So if they were audited and the government takes an aggressive position, or the auditor does, and we go to court and fight that, or they've just had an unfortunate situation where they owe taxes and they can't pay it. So that's the majority of what I do, the vast majority. People are always surprised when I talk about what I do because they're paying their taxes, and I think it's hard for them to imagine, but there are a lot of people who aren't. And they're not going to go around sharing it because it's embarrassing. But and by the way, I think you're going to have a lot of people who have never owed taxes before owe it in this environment. So like I'm thinking of, like, let's say, I had a restaurant owner client and his was crushing it last year. 2019 was like a banner year for him, and his tax planning was that he would wait and just make a lump sum payment of what he owed when he filed his return April 15th. Well, his financial situation has deteriorated, and maybe he needed to use that tax money to, survive. Right now, he's probably going to have an income tax debt he can't pay. Represent a lot of businesses who haven't paid. Sorry, can you hear that? That's my dog. We had a delivery guy just come. So working from home, it's amusing. But I think you're going to have a lot of businesses who have payroll tax liabilities, who have sales tax liabilities, that they can't pay, right? And so we deal with that too. Which, by the way, we didn't say it earlier. The employee retention credit is a payment, right? It's a tax credit. So if someone knew they were going to owe payroll taxes, and the penalties and interest on payroll taxes are excessive, they're very high, that could be a way to avoid it. But what do we do? So if, let's say someone already had a deal with the government, they're in an installment agreement or some other type of resolution, now would be the time for them to renegotiate. A change in financial circumstance is grounds to renegotiate. And I like to say it's opposite land. So the worse off the taxpayer is financially, the more likely they are to get a good deal with the government. So it's really like a collectability analysis. So the less assets you have, the more debt you have, the less interested they are in taking these things. And then, the less money you're making, the more likely it is they'll settle, because they're gonna have a hard time collecting it from you. So I represent a massage parlor who has about a $500,000 payroll tax liability. And in February, we were very close to agreeing to a $3,500 a month payment plan with the IRS. We owed some additional documents to the revenue officer, and we had 30 days to provide those documents. So we waited until, day 30, which happened to fall after, the world fell apart. I called up the revenue officer and I was like, look, the agreement that we just tentatively negotiated no longer is valid. My client's revenues are zero now. We need to talk about this again. And that business now is in what's called currently not collectible status, because their revenues changed so much. Basically, they don't have to pay anything. They still owe it. They don't have to pay anything for 2 years. So they went from paying $3,500 a month to paying nothing. If someone expects they're going to owe, but doesn't already, if they're an individual, I would extend the tax return, push it out as far as you can, maybe borrow. The interest rate on IRS debt is 3% now. They charge a late payment penalty of a 0.5 percentage point per month. So you're talking, about a 9% interest rate total. If you're in an installment agreement, they lower it where it would be about 6. So it's kind of cheap debt. And then, the IRS will do payment plans. They have a settlement program. Sometimes they'll abate your penalties. If it's the first time you've ever had a tax liability, they will abate penalties. The other thing I would add is you had asked about, has anything changed due to the crisis? So the Internal Revenue Service announced their People First initiative. This is basically an announcement that they're going to leave taxpayers alone through July 15th. So they moved the tax deadline to July 15th, and they also are doing a moratorium on enforcement action. So no seizures, tax liens, garnishments, none of the nasty stuff that they normally do to my clients or try to do to my clients will be happening. Mm-hmm. They stopped issuing most notices, and a bunch of other things, but that's kind of big picture. I anticipate that things will restart after July 15th. So the commissioner that President Trump appointed is very pro-enforcement. And they were allocated an extra $300 million to hire 5,000 new agents last year, and they did it. And I think those people are chomping at the bit to go after folks, unfortunately. Okay.
What about, is there anything, so I know what you said mostly applies to individuals. Is it any different for businesses?
Yeah, so like all the resolutions are the same for businesses. You can do settlements, which are called offers in compromise. You can do installment agreements. You can do uncollectible status, bankruptcy. The big difference is that some type of business taxes, so payroll tax, sales tax, withholding tax, are what are called trust fund taxes, Paul. Okay. What that means is typically you're paying in other people's money. So like with sales tax, you charge the customer the sales tax, and you held it in trust for their benefit and paid it in, or were supposed to pay it in. payroll taxes, it's the employee withholding and the employee's Social Security and Medicare. So the government can hold owners personally liable for that. So normally, if you have, an LLC, a business entity, it provides some shelter of liability. Here, the IRS can, break that and come after them personally. Mm-hmm. So that's a wrinkle that's different with businesses. Many times we are looking at like restructuring, like, is it possible that, there could be a new owner or an investor? Because if you are able to restructure, you usually can walk away from some of the debt to get a discount. The kind of things we do, so like the value I add to clients who have tax liabilities. So number one, we delay. When someone owes a tax debt, especially right now, they need the cash. They don't need to be paying the government. So I understand, when they're in danger and when they're not, and I defer as long as I possibly can. And many times we can delay a year or two. And I prevent enforcement action. So I know when they're in danger and when these things can happen, and I stop it. And I never let my clients, get into those situations. When you have a tax debt, the government has 10 years to collect it. The IRS, every state is different, but the IRS is 10 years. So we have clients where we literally delay to the end of the 10-year period, and the debt gets written off. We put people in this thing called currently not collectible status I talked about earlier. Basically, you still owe it, the business or individual owes it, but you don't have to pay anything. And so the idea is you try to get in the status and wait out the 10-year period, or you just get in the status because you can't afford to pay anything, and you punt for a year or two. Mm-hmm. Installment agreements. So the interesting thing about the IRS is they will do installment agreements based upon your ability to pay them. So I have clients who owe millions who are in installment agreements of like $200 a month. It is not based upon what you actually owe. So there are like two types of installment agreements: a full pay, which means you're going to pay it in full. Those are typically 6 years. Partial pays are you will never pay it in full, and you're just waiting out the 10-year period. We do a lot of penalty abatement requests. If it's someone's first time having a tax issue, it is very likely that the Internal Revenue Service would waive their penalties, the late payment or late filing penalty. But basically, if we don't have that situation, we just need a good sob story to, get them out of the penalties. And we do settlements too. They're called offers in compromise and bankruptcy. So we do tax and bankruptcy here in Atlanta. And you can discharge income taxes by filing for bankruptcy. So I won't drone on about what I do because it's not super interesting. I would just add that we're a federal practice, like we said earlier, so I can represent clients nationwide.
Absolutely. No, that's awesome. Thanks so much, Jason. And we've got a full 20 minutes for questions, just like we promised. So we're still good on that. Before we start answering questions, because, just in case people have to leave before we wrap up, contact information. So you guys can always email us through the Zoom link, and I can share that with you. But Jason, you want to just share your phone number and email?
Yeah, so our office number is 404-233-9800. And my email is jwiggam, so first initial, last name, so JWIGGAM @wiggamgear.com, WIGGAMGEER.com.
Awesome. And if anyone didn't get that, well, A, I guess we could put it in the chat now, but B, you can always email me for that information. So, all right, so while Jason's doing that, I'm going to read the first question we have here. See if you want to tackle that, Jason. So if you file your 2019 taxes but owe money, will you or can you receive the stimulus check? I don't know if the rest of the details are, you need, I don't know if you need it for the question.
Yeah, you still get it. So like normally they would offset the money if you owe, but here they're not. So and I mean the other thing I would say is if you're going to owe for 2019, I would wait to file. You know, I wouldn't file right away. You could wait and file in July or extend till October. You know, and so then you should get the stimulus check based upon your 2018 tax return if you qualify. They will use whatever direct deposit information you had on file with your 2018 return. And if you didn't do a direct deposit, they're going to mail it to your last known address. So as long as the address from your 2018 tax return is still current, you would get that money.
Okay, excellent. So next question is it better to get guidance from a tax attorney or an accountant as far as which options are best for a specific business? And probably need clarification on what she means by options for what, but maybe you can just globally answer that question, Jason.
Yeah, I mean, obviously.
When is it better to talk to you rather than to PA?
I mean, obviously I'm a bit biased, you know, being a tax attorney and not a CPA, but you're welcome, Bill. So yeah, I mean, look, there is overlap between attorneys and CPAs, but CPAs can't do legal work. And, you know, I personally don't do any compliance work like CPAs do. So I would say it depends on the person, number one. Number two, what you're trying to do. Certain things you really can only use an attorney for. And, you know, for most people, a lot of the clients I deal with, they have both. You know, I have clients who I'm one of their advisors and their CPA is too. So I don't think it's necessarily a one or the other type of thing. I think it's sort of how complicated the issue is and what you're trying to achieve. And then even then I would welcome, you know, multiple people.
Now, as far as getting help with like, so I guess there are two ends, right? There's the, you know, tax planning and tax filing, right? And then there's problems, right? Dealing with the IRS and stuff like that. Would you make a distinction between these two things or not?
Well, I mean, so look, on both, CPAs and tax attorneys do both. I personally just do tax problems. I mean, if I have...
You don't help with the filing, you just help with the problems that come up later, right?
Yeah, but there are tax attorneys who only do tax planning, you know, and I work with them.
Right.
And I even do some of it, just not the uber complicated stuff. But, you know, it's typically it's a transaction that's involved, and you need an attorney to prepare all the paperwork, right? Or, you know, maybe there's a trust involved. You need an attorney to set up the trust, or, you know, do the reorganization, or, you know, whatever it is. And some of the more complicated stuff, frankly, I guess one isn't better than the other. It just depends on who your people are. Like, do you have someone who is a good tax strategist? A CPA can be a good tax strategist, and an attorney can. I think that's really what it comes down to. And then once you have the right people, it could be that you might need both, depending on what it is.
That makes sense. All right, cool. So there's a question here in the chat, and then we'll go back to the Q&A window. So will the forgiveness be predicated on showing actual economic/financial injury, and what would that look like? I'm assuming that's a question that relates to the PPP, and I can take a first stab at it, and then Jason, you can
Sure.
tell, you know, what you think. So I don't think it's the forgiveness so much that's predicated on actual economic financial injury. I think it's the application. Like when you apply for the PPP, you certify that, and I forget the exact language, but it's something like you certify that economic uncertainty makes it necessary for you to want to apply for this loan. And if I think if at the time of when you applied you believe that, I think up to that point you're good. Now, the SBA hasn't issued a lot of detail on forgiveness. They've issued some, so who knows what might change. But I don't believe that you showing significant economic or financial injury will be a necessary component of getting forgiveness. I don't know, Jason, do you have anything more to add to that?
I agree with that. I mean, like you said, you had to attest that, you know, the pandemic is affecting your business. And that's really all that was required as to the economic / financial injury. Forgiveness is what you spend the money on over the next 8 weeks. And, you know, there are some restrictions. So it's very important that you have advice and someone advising you on that. And I know Paul is doing that. So if you don't have someone, I'd highly recommend him. But you have to spend the money, 70% of the money on payroll, 25% on you know, non-payroll items like rent, utilities, mortgage interest, etc. And the bank is going to sort of audit what you spent the money on. So that's how you get the forgiveness. It has nothing to do with, you know, frankly, your revenues of your business could go up and you could still qualify. That's sort of the interesting thing.
All right, let's see. Next question. It's kind of long. Okay, so our company applied for the PPP EIDL and the $10,000 grant. We received the PPP funding, but I've heard nothing on the EIDL as of yet. Many, if not most people, haven't, just so you know. I did get the confirmation number. I know the IRS is not responding because of the amount of applicants. I'm assuming that we probably qualified but didn't receive the money as it ran out, though we applied on day 2 of the offering being open. Should I assume that we're still in the queue, so to speak, for the next wave of funds and just be patient? I assume I don't need to reapply again for the second influx of money. So I'll take, if you don't mind, Jason, let me take a stab at it. At this one too. So even though the SBA has for now closed the portal for new EIDL applications, it doesn't mean that's already run out of money. It just meant that up until the point where they closed the portal, they thought that at that point, if they got more applications, they may not be able to fund them. So we've got a lot of people who have applied and are still today getting deposits of the grants in their bank accounts, even though the SBA is not taking any more applications. In your specific case, it depends. We know for a fact that some of the people who applied very early on, there were certain days, even certain hours, where the SBA had the wrong application up. And there was one weekend where it all crashed and they were asking for PDF applications instead. And for those people, they actually recommended that you reapply. So I don't know, it really comes down to like what day, even what hour you applied, and whether you're in that small window of applications where the SBA recommended that you actually apply using the new portal. So I don't know if you should reapply. I don't know if you're in that window. I know it kind of sucks, but you kind of have to talk to them and ask them, and I know they're not going to answer or be useful to you, so I'm sorry, I just don't know. It depends, the answer is, right, Jason? I don't know, Jason, do you have anything else, Jason, on that? Or
I agree with that. I think the fact that you haven't heard anything doesn't mean you're not going to get it. And if you had a confirmation number, I wouldn't reapply. As long as you applied under the second portal that Paul was talking about.
All right. If you owe, Jason, this is for you, if you owe the IRS for business taxes and are on an installment plan, can the COVID-19 EIDL loan be used to satisfy those unpaid business taxes?
So I think the answer is yes, but I would want to look at it more. My understanding is the uses of an EIDL loan are much broader than the PPP loan. And, you know, you can, you know what, I have a graphic on that. Let's see. So it says,
it doesn't specifically say taxes, I know that, but it's big. It's other operational costs or whatever.
It says fixed debts and other expenses that other necessary business expenses that cannot be paid due to the disaster. So I think you would have to see what is considered a fixed debt. I mean, typically the government's going to file a tax lien, so their debt is secured. So it could be a fixed debt. And then, arguably it could qualify as one of those business expenses too. And yeah, if you can do that, you'd be much better off owing the SBA than the IRS, for sure.
Excellent. Now, the next question is I think is a follow-up to one of the questions we answered, which is the question about accountant versus CPA. And she's clarifying that her question was about getting advice or options for PPP versus EIDL in particular. So I'll answer that first. That could be a tax attorney, that could be a business attorney, that could be an accountant. But just make sure that whoever it is advising you on getting a PPP loan and or an EIDL loan just really knows their stuff and is up to date and is daily checking on the SBA's new guidelines and all that stuff. I'm not going to pretend that only lawyers can do this, but lawyers know how to read legislation better than non-lawyers. So on that note, now on payroll tax deferral and whether to do that or to do the PPP, again, I think probably Jason's answer applies, which, in theory you could do both. I would, maybe I'm biased too, but I think, a tax attorney who's up to date on these and is reading regs all the time might be very well positioned to answer those. But a very good accountant theoretically could do it too. Just make sure they're really reading regs, right, Jason?
Yeah, with the payroll tax deferral and doing like the so like you can't do the payroll tax deferral and the PPP. It's one or the other. So if you went the employee retention credit / payroll tax deferral route, I would advise my clients to stop paying their payroll taxes, which is kind of scary, but that's how you save the cash now. And then a lot of this stuff is new and the IRS has issued forms and guidance, but I suspect things are going to get screwed up. Penalties are going to be assessed. There are going to be problems. So I think having an attorney to assist and, who can help you sleep well at night would be important if you went that route. Yeah. So I agree with you, Paul, that I would use a tax attorney if you're, considering going that route.
Excellent. All right, next question is, one of the SBA loans asked for collateral after approving and dispersing the funds. Have you heard of anything like that? I think it was the disaster loan. And yeah, I would guess it was almost certainly the EIDL loan rather than the PPP. And for as long as you're above a certain amount, I think above 25,000, then they can ask you for collateral, right? I don't know, Jason, if you have these numbers memorized, but I think it's 25,000 and above.
Yeah, it's that sounds right. Yes, if it's above 25, the SBA is on an EIDL loan is going to ask for collateral most likely. And most SBA loans, so we do bankruptcy too. SBA is notorious for, getting a lien and everything and, getting personal guarantees and being generally aggressive. So here, I think it's just collateral above 25,000. And Paul, I think my recollection is a personal guarantee waiver up to like 200 or 250. Do you know that?
Yeah. It is around 200 or 250, and I don't remember what it is. I probably have it on my notes here, but yeah, it's around that.
Got it.
That amount, yeah, absolutely. So, all right. And then what seems to be the last question, unless somebody wants to, actually, never mind. We have two more questions. If I applied for the PPP or the EIDL and was notified that money's ran out, do I have to reapply? So I would say for the EIDL, again, unless you're in that weird window, which I think was somewhere in like late March, around March 30th or whatever, unless you were you applied around then, if you applied like April 1st or April 2nd and later, I'd say you're okay. You don't need to reapply for the EIDL. You're in the queue, and I think there's no reason they haven't said that you need to reapply. As for the PPP, that's a little bit different. I think that depends on where you applied, what lending institution you used, where you are in the process. Have they submitted your application to the SBA? I know that the SBA has said that they're not going to keep a queue, so maybe your lender is keeping a queue, but the SBA will not. So check with your lender, see if you're still in their queue, and if they're not responding or whatever, you can always withdraw your application and use. And by the way, if you can't find a lender, I have a couple of avenues for you. You can contact me. They've been very good and responsive, but you may have to reapply. You just have to check with your lender on the PPP. And then I think we'll take the last question now. Can you use the COVID-19 EIDL loan for expansion, i.e. can it be used to finance the purchase of a building for the business? I'm pretty sure the answer is very specifically no, but Jason,
I would agree with that. I mean, on the building, I mean, I guess theoretically, if expansion was like, investing in marketing or, normal necessary business expenses, I could maybe see it, but I think a building is no. Now, the Federal Reserve announced their Main Street lending program, which I think we're all going to be hearing more about here over the next month, because it's not finalized yet. It's going to go through the banks. You will be able to use that to expand and building or buy out competitors or whatever. Have you? That's kind of Paul's thing, so I don't want to get into it. But
yeah, I don't know, honestly. I mean, we haven't gotten into the Main Street, and honestly, that's probably targeted for bigger businesses than most businesses that are on this call today. But as far as to go back on the issue of expansion, I'd be careful. I'd be careful about they don't want you to use the EIDL loan kind of as a windfall. Okay, they don't want you to come out of this like being like, oh, like this was a great substitute for me getting a normal loan and expanding operations or whatever. You can spend on things that reasonably you would have spent on before, operational expenses and so on, generally speaking. But I wouldn't like launch a new product line on top of your other, you know what I mean? So, I mean, you'll need more one-on-one consult on this point. So, but generally speaking, I'd be very careful with that. So good. So that was the last question. So Jason, thank you so much. That was really awesome. Hopefully now everyone who's listening to this kind of understands why when people, need help with, need a tax lawyer, I send them to you, even though you're several states away. I appreciate your knowledge and everything you've shared. And we've put our, the contact information in the chat. If you guys need any more information, contact us. Thanks again for your time, Jason.
All right, thanks. Have a good one.
All right, take care, guys. Bye.